Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. If you're a regular follower of the show, you'll know that this is our 5th birthday. We started the show on the 17th of August 2009. So we're going to have 2 special programs this week and next week, 2 longer length programs to discuss recent trades and our general every week show, but also look back at the 5 years that have been where things went right, where things went wrong. And as always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
I was looking through developmental milestones for 5-year-olds, as one does, when I should have been reading the ShopRite results. And apparently they're more independent, self-confident, they can sing and rhyme quite well, and they can generally count 10 or more. So do you think, we're at the stage in our development now? Does it sum up?
I think we are. I'm not sure about the sing and rhyme part, but certainly I can count to 10, and I can and I do feel a lot more confident. I think that this show's come a long way, and we've got a lot of good trading under our belt over the last 5 years, which I think we can be proud of.
Well, we'll talk about that, as I said, in the second segment of the show. This is the longer length feature this evening. But let's start off with our regular chat and look back at some of the recent trades for the portfolio. The first one I know you want to highlight is Naspers.
Yes, that's right. So we went into Naspers a couple of weeks ago, and I'll go through this trade again. We have banked profits on it now over the last week, fortunately, because it's come back down quite a bit since then. But if we have a look at the chart of Naspers at the moment, now what I had initially noticed was that there was this big area of overhead resistance which the stock kept on bumping up against, and the likelihood was always that this resistance was going to break. It's a very strong stock. It's got a lot of momentum on its side, and my feeling was that it would push through that resistance at some point, and when it pushed through, it could potentially be quite a nice, powerful move. We identified also that there was this rising channel that's been in place since early June, and that's been quite neatly adhered to. You can see the stock bouncing off the lows of that channel and again off the highs over the last number of months. So what we did initially, we went along and we bought 165 CFDs of the stock at 1,300 Rand, and we used a stop loss at 1,270. Now there was a period where our stop loss was actually flirted with, but we never got out of the trade. We stuck with it, and it did eventually break out. And what I'd identified then after that was that in addition to the existing bullish setup that I'd seen, I identified that there was a bull flag forming just below this big resistance area. And when we saw the stock breaking out through the top of that bull flag, I then thought, well, that's actually an opportunity to add to our existing trade. And we're looking for a target of 1,420 based off of that flag structure. So I went along and I added another 75 CFDs to our position at 1,339 Rand. And as you can see, it's worked out quite nicely. We saw the stock up very strong last week, and then it's given back quite a lot of those gains over the last week or so. But our intention here was always to try and sell out at 1,420 Rand. It got there, and it actually went beyond that. It went to 1,475 Rand intraday. Yeah. And that move looked very squeezy. It looked like there were lots of shorts being pushed out of the stock at that point in time. Nonetheless, we sold out at our intended target price. We banked 22,500 Rand on this trade. So it's actually been one of our best trades of the year. Yeah. And I'm happy that we did get out when we did, because now it's actually pulled back quite a lot. And I suppose one could even look at it now again and say, well, is it now not approaching a nice area of support where maybe once again it's worth another look on the long side? But we're not doing that this week, but it's certainly something that is potentially whetting my appetite. Yeah,
and if you get back in sort of a perfect trading share in a way, and I did watch actually as it barreled its way past 1450, 1460, and I wondered where you'd managed to sell out. So I was hoping you'd have sold out close to the top of that, but it happened very, very quickly, as you say, and then came all the way back down again. And I suppose if you'd thought, oh, well, I'm going to hang on for more, you'd be quite disappointed by the subsequent action.
Yeah, absolutely. You know what, this is a market where you've got to take your profits, and we actually will allude to that towards the end of this show, where we're going to look at the top 40 and how range bound it's been. It's not an environment that's made it easy to run profits. You've had to take your profits in this market over the last 2 months or so.
Okay, so that's Naspers, and well done. That looks like a fantastic trade. What about some of the others that we've had long positions in, still have long positions in, starting off with AngloGold Ashanti?
Yeah, so AngloGold Ashanti was actually the trade that we did for the show last week. And if you have a look, what I'd identified here was that, first of all, we've got the stock in a rising trend. Believe it or not, AngloGold is actually the top performing share on the top 40 for the year to date. You might not realize that.
Is it still in the top 40?
It is still in the top 40, and it's actually the best performing share for the year to date, which is rather surprising actually. But you can see since January, when it was about 120, 130 odd rand, I mean it's actually moved up nicely since then. Anyway, we saw that the stock was pulling back to this large upward trend. I also identified that there was a big inverted head and shoulders pattern here, as you can see illustrated on the graph there. There's this neckline or resistance area, which is at about 196 Rand a share. And we really need to see the stock breaking through that resistance to validate this inverted head and shoulders pattern. And that will then open further upside. And we're looking at a potential target of 235 Rand here, if that neckline was to break. But it hasn't broken yet. But I took a view last week that given that the stock was quite oversold, given that it was bouncing off of this uptrend, it looked to me like it was a reasonably good area to be getting long of the stock. So we went in, I bought 1,160 CFDs for our portfolio at 185 Rand with a stop loss at 179. Now I preempted the break here, which is, you could argue, is a little bit naughty, but I felt that you get a better risk to reward ratio by doing it this way rather than trying to chase the break if it breaks out through 196 Rand. So we went in. The stock has given me reason to sweat a little bit over the last week or so, especially last week Friday. It got close to our stop loss, but it hasn't triggered the stop loss. It's looking a little bit better now. So we're still in the trade, albeit slightly underwater at the moment. I think it still looks okay to me. What's interesting is I think possibly we're starting to line up with a little bit of positive divergence here on the stochastic, where the stock price makes a slightly lower low and the stochastic makes a higher low. So that's something that's maybe, in the bullish camp would support our view somewhat. Anyway, we're in this trade. We put 2% capital risk on it. We're happy to sit tight with the trade here, and let's see how this one plays out for the rest of the week now.
I mean, Garth, do you wish that maybe you had sold out on Friday when it was looking sickly? Then you could have just cut out of the position, looked at maybe a healthier looking scenario, because you sort of, one seems to be sticking to one's guns here, but with a certain degree of nervousness. Yeah,
absolutely. Look, I think that the key is, like I said, I've actually gone in and I've preempted the breakout here. The safer way to play it probably would have been to wait for a break above the neckline of that inverted head and shoulders and then try and buy the stock. But the thing is, then your risk to reward ratio is not nearly as good if you do that. And my feeling was to try and actually get the best risk to reward ratio here. So you know what, we've got a strategy. I'm happy to stick with it. I accepted the risk up front, which we always have to with every trade. And let's see, by and large, I still think that this structure does look good. If it doesn't work out well, then we know what we need to do when the stop loss gets breached.
So be it. All right, Garth, you mentioned that you wanted to bring up a chart of the top 40 and that it's been a difficult market in which to sort of ride your profits. Is it because it's just been choppy and fairly constrained?
Yeah, it's been a very, very tough market over the last 2 months. And if you have a look at this now, this is a fairly zoomed in graph of the top 40 index. This is a daily graph, so it's making one plotting every single day. But if you have a look, we've actually been range bound between 45,200 at the bottom end and 47,200 at the top end. And if you look, from the middle of June basically to now, which is the middle of August, so 2 months, it's actually 44 trading days.
Yeah.
The index is at exactly the same level now as what it was 44 days ago. So trading days, so that, excluding the weekends, 2 months, the index has been at the same level. Now, obviously, in hindsight, it's easy to look back and say, oh, well, that's a very tradable range, 45,200 to 47,200. There's 2,000 points in there.
Yeah, sure.
It's easy in hindsight, but at the time it's not that easy. And we alluded to it earlier. It hasn't been a great environment to try and run your profits because the market has been range bound. It's been choppy. It's been trendless. I mean, that is a very trendless environment that we see over there. So if you found the last 2 months to be quite difficult and frustrating, I certainly have, you're not alone. And this chart is testament to why that is the case. The easiest type of market to trade is a trending market. And we've had a reasonably good trending market for the first half of this year. But now, since the middle of June, it's been trendless with choppy action, no follow through, false breaks and whatnot, which makes the environment quite difficult.
Is this not a normal phenomenon in the middle of the year? We have talked about it many times, the Northern Hemisphere summer, which does essentially start mid-June. We're in the peak of it, and until probably the next week or so. And is that a factor, do you think, or is it because the economic data has been quite confusing? You don't actually know if economies are doing that much better or that much worse, and one's struggling to figure out what's happening with the world out there.
I think it's probably a combination of all of that. And in addition to what you're saying now, it's also getting to grips with the fact that the stimulus in the US economy is also gradually being withdrawn. So there's a whole bunch of things which do create some uncertainty. But yes, to answer your initial question, this time of the year is actually, in my experience, it's some of the hardest months of the year to trade, the middle months, because it does tend to, we do see the market going choppy sideways with not a lot of direction. And it's no different this year, really. It's
not necessarily very fun if people tune in every week and see that we don't add on any trades, but for oneself, is it almost better to just say, I'm just going to stay out of the market until I get a clearer sense of where the trend may be?
I think you could do that, or the alternative is that you adapt your style and you take a much shorter term approach to trading, and you look for intraday moves or very short 1 or 2 day movements. Look to try and capitalize on really oversold situations and sell into really overbought situations, that type of thing. It requires a different type of trading style to get a market like this right, as opposed to a trending market. A trending market's way easier to trade than this type of market.
Yeah. Well, I suppose this is where you cut your teeth. Garth, so what does the portfolio look like given the developments of the last week or so?
All right, so our portfolio has actually pulled back a little bit over the last week or so. We are still up 36.6% for the year to date, so still looking good. But you'll remember last week we were up about 42%. Yeah. And where the fallout has come, if you like, is in our AngloGold position. We were up 10,000 Rand on that trade last week. We're now down 1,000 Rand on a mark-to-market basis. We've closed out the trade in Naspers. We made a nice profit there. And then that trade in PSG Group is still sitting in the background, and it's kind of become a bit of a pain trade now, because it looked so good for us initially. But now we've seen some negative press around Capitec and Able, the fallout from African Bank, which does seem to have knocked the sentiment around Capitec, which has a corresponding knock-on effect to the holding company PSG Group. So although we're still up on that trade, we were up significantly more at one stage, and that's been one of the trades that over the last week has sort of dulled down our performance somewhat.
Yeah. And it's particularly frustrating because now you think, well, with hindsight, maybe you should have cut out when you were, further in the money. Yeah. So what does one do at this stage, and does one expect to bounce back? It would be horrible to close out this trade and not have made any money at all. Yeah.
It will be horrible if that happens, and I guess again that's the testament to the kind of market we're in. Yeah. Like I was saying, it's difficult to run your profits. Probably now in hindsight, which is always an exact science, I should have actually banked the profit when the share was 100 Rand, but it's not the case anymore. We've got to now see what we do going forward.
Live with it.
Yeah.
Garth, so what is, okay, so that's what the portfolio looks like. Just before we get to the break, upcoming courses and also specials, seeing as it is your 5th birthday.
Yeah, well, that's right. It's not only the 5th birthday of this TV show, it's also the 5th birthday of my website, traderscorner.co.za. And you can go on, we're actually running a 5-year birthday promotional special at the moment, where you can get a 1-month subscription for half the normal price. So the normal price is 299 Rand. Half price this month only, it's 149 Rand to subscribe for 1 month. And on that website you get all our analysis, where we publish everything that you see on this TV show and a hell of a lot more. You can get access to all of that on our website. And then in terms of courses, there's also a promotion that I'm running there. Okay. You can save 1,000 Rand on a high probability trading course. So there the normal price is 2,490 Rand. I've marked it down to 1,490 Rand to celebrate our 5th birthday. Those are the dates you can see. I'm in Johannesburg, Cape Town and Durban, and the course on the 6th of September is actually sold out now. So I've added an extra date on the 27th of September, so due to popular demand. I've added another date in Johannesburg. So anybody that's interested in attending one of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the information.
Okay. Well, that ends part 1 of this 5th birthday special, so do stay with us for more after the break.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.